Hello and welcome. This is smarthelping.com. This is the overview video for the general rental business of tangible goods, 5-year financial model. The upgrades that were done included interconnected 3-statement model, income statement, balance sheet, and cash flow statement, monthly and annual. Also added a cap table, uh, capex, terminal value, and updated the global control panel here. So this is a nice financial simulation for anybody that's get into the general rental business. This model specifically would be good if you are buying, let's say, party supplies, furniture, equipment, and then renting it out over time. So I'll go through each tab, explain how it works and how everything flows, and then you'll have a better understanding of what's going on here. So let's start with the Global Control tab. Company name entry. This will flow to the financial statements right up top here. The launch year, which will drive the timing. You can see the months here and year, as well as here. And you can adjust this to anything. Make sure when you do adjust this that you also adjust the relevant drop downs on the other light yellow tabs, because if the year changes, that will change what is selectable. Like on all these drop downs. You've also got the exit end month. So this is you can model any amount of time up to 5 years and end the model on any month. Also, there's terminal value, so you can choose to include that or not. If yes, you can also define the multiple, and the terminal value is just based on the trailing 12-month EBITDA times this multiple. Note that the only reason this is here is because we need to do a proper discounted cash flow analysis, and to do that we need terminal value. Because obviously the business is going to have some value when you stop, and so to capture that, that's why there's a terminal value. Otherwise, you would run the model into perpetuity and discount the cash flows until they go to zero. But this is a bit cleaner way, and also people like this to see potential multiples in valuations and see what they can build it into. So that's the top section. Then we got cash sources. So debt funding here, if you're going to finance any with traditional P&I loan, you define the amount here, any remaining equity required based on startup costs and any operational burn will populate here. Now on the debt funding, you can go and define the debt terms, loan term, interest rate, payments per year, first payment date. This equity required will flow to the cap table. Minimum equity to keep the cash balance above zero on the balance sheet. Total shares, share types, amount invested per up to 20 outside investors and their share of each stock type, and fully diluted ownership value. Same with the owner side, their investment and their percentage. There's checks down here. These all should always be zero. Otherwise, you've allocated less than or greater than 100% of what's available. Also on this, it has a discounted or internal rate of return calc for each individual, as well as the overall based on the distributable cash flow available and the ownership defined. So yep, that's investor owner equity, debt to equity calculation. Taxes, if you don't want taxes, that's fine, zero amount. If you do, they will flow accordingly. And you can define some of the terminal value that's applied to fixed assets, and then the long-term capital gains rate will apply to that. It's not super complex, but it is enough to get you some idea of cash flow after tax if you want to show that. Then all these sanity checks here make sure all the different summaries and cash flows and everything match up and there's no errors all in one spot. So if any of these are not zero, you've probably done something that's not logical. Next, we move on to the revenue assumptions. So this is where we're actually defining the scale out of the rental business. You can do up to 25 categories of things, and then each category can have up to 7 purchase rounds within the 5 years. In each round, you could define the cost per unit and the amount of units purchased. All that will then flow to the depreciation schedule, as well as start in on the revenue based on the units being rented out, and then this schedule for rental fees average per day for the units of each category. You've also got utilization here, so obviously you want to rent out everything you have, but you probably won't. You can define the percentages of the total you think you'll be able to rent out here, and adjust that over the 5 years. You can also determine the degradation of units. So if you have something that you buy, you might be able to rent it out for 5 years without any degradation, then you put 0%. But if you think there's a chance something will happen to the units you're renting out, or there's wear and tear, and they're just worth less to rent out over time, you can have that here, and then this will tell you how many months that'll get you until it's all the way depleted. So that was some cool logic. We did then average working days per month to get the total monthly revenue based on all these inputs. And the revenue is calculated for all the categories based on the purchases happening. So as you ramp up, everything automatically populates. And this will flow. You can see the monthly detail here. You can see purchase units, cumulative purchase number, total purchase cost, cumulative purchases, and then here's the rentable units, units fully rented out per month. So there's the utilization. You can see it's 10% at the beginning for this first one, and then it changed over time. Then based on that, you can see the actual rental revenue, average monthly rental revenue per available unit and per unit rented. So this difference is kind of how much you're losing on essentially underutilization. There's also a nice visual for that. You've got Opex. So Opex is going to be defined here on the Opex tab. These are just overheads, different things, fixed costs over time. You can define the monthly cost each year, the start month, and the category. We've got sales and marketing, general administrative, research and development, some more G&A as direct percentage of revenue. This is kind of a catch-all if you can't make it scale anywhere else. We've also got cost per rental and initial rental schedule. So this is to define if the company bears any cost when something is rented out. And so every time you have to deploy a unit, what's the total cost to the company, which you can define here. And also if there's a return cost that the company bears, you define that here. And then you would define the frequency of months it's rented, or how many times something is rented out per X months. So if you put 2 here, it means you rent it out once every 2 months. Or if there was a 1, it's rented out once a month. If there was a 36, it's rented out once every 36 months. And that'll just define the frequency that these costs get applied based on the units that are being rented. Note, if you rent out something more than once per month, you would just put 1 here. So this cost happens once, but then you would multiply the cost by the amount of time. So if it was 15 times a month, you would just make the cost 15 times what it would be for just one time. And that'll give you the same cost. And this is a nice variable cost structure that was pretty difficult to implement, but I'm happy it was done. It's really cool. This was actually an upgrade done to the model, I don't even know, maybe a year ago. So I like it. It ended up being really good. Then we've got return rental. This is just formulas. CapEx, this is pulling from the revenue logic, basically showing the total cost of each unit tranche purchased for all 25 categories for all 7 tranches. And then each one will have its monthly depreciation. The only difference is the top one is just for a building. If you're buying a building to operate in, you can put that the relevant assumptions up here. And if not, just zero it out. Cap table I already went over. Terminal value. This is just showing you what's going on with all of the different sources of proceeds on the exit if you're going to show that. If you select yes on the global control tab here, this will fill out. Now if you put no here, you can see the terminal value just zeroes out. But if we have yes, here's extraordinary income, which is based on this percentage, and then any remaining goes to CapEx, and you've got your building as a separate piece. Startup costs, just one-time fees, legal fees, etc. They'll just hit right at month 1 on the income statement. Debt schedule, went over that, and now we have our income statement. So you see everything put together: total rental revenue, cost of goods sold, Gross profit, there is no cost of goods sold in this case. General administrative, sales and marketing, research development, startup costs over time. Interest expense, depreciation, extraordinary income. Oh, and there is an EBITDA calc here to show essentially operational cash flows and how long it takes to get positive. Then we've got all the way down to taxes and net income. Income statement annual, same thing, but on an annual basis. Balance sheet, you've got your current assets, non-current assets, which current assets is just going to be cash in this case. Then you've got all your different tranches of units purchased, which are rented out over time. Accumulated depreciation, total assets. This is a contra asset, accumulated depreciation. Long-term debt for liability, that's the only one that goes in there. And then you got equity, which is the funds contributed, and essentially just the retained earnings, and that'll give it total owner's equity. And we got the accounting equation, assets will always equal liabilities plus owner's equity, so you got your check there all the way through, and that should always be 0. And this is all connected to all the assumptions. Balance sheet annual, same thing, but on an annual basis. Cash flow really gives you the insight on what's happening with cash flow in a given period. So you've got your operating activity cash flow, which is just taking customer receipts, expenses, interest, taxes. So that's everything that's happening within the operational cash or operating activity section of the business. Then you've got investing activities, CapEx, business sales, depreciable assets, and financing activities, which would be borrowing debt, principal repayments, and sale of common stock, or basically selling equity. Then this will all flow over to the balance sheet, and everything is all connected with all these financial statements. So you can get insights on the formulas there, which this is pretty difficult to do for the first time if you're doing it, and if you are not, it's really good to have this here because you know it takes a long time to do and it's very difficult. So we got that. Monthly detail gives you essentially how everything is being driven off the assumptions in detail, all the way down to EBITDA and actual cash flow. We've also got a net units in storage here, which is just taking the total units being rented out versus what's not. And it's just a utilization factor, so you can see how many units you're going to have just sitting around over time. Annual detail does the same thing, but on an annual basis. Distributions, this is discounted cash flow analysis for the investor and owner pools in aggregate, as well as the project. You can see the IRR, net present value, based on a discount rate. And these aggregate totals will match the cap table totals as well. You can see 78.9, 3045.6. This is 78.9, 345.6. Another visual here as well. Logic here was difficult to do. It took me a while to get to this point, but this is nice because it doesn't double count anything. It gives you a nice set of total cash required and then total distributed without, with accounting for everything properly. Executive summary is just another high-level financial view, drives down to EBITDA and other cash flow items, kind of a consolidated view of everything, and then you've got some return metrics down here, as well as some visuals on revenue and EBITDA and net income. And this, I'm actually going to change this more accurate just to say EBITDA there. Visualizations, a whole bunch here. A whole bunch of visualizations to summarize the result of the assumptions. This is a pretty nice way to view what you're actually saying in a visual way. Expenses. This is the utilization chart, which is really cool. The bigger this gap is, the bigger inefficiency you have in the value you're getting from things rented out versus things just sitting there and not being rented out. Monthly cash flow, accumulated cash, monthly cash, EBITDA. And so all this is going to be driven on the assumptions, and they'll change as they change. And then how all the magic happens is all these matrix tabs. This is how to make everything dynamic, and there's a lot of stuff going on here to make the assumptions be able to work like they do. So this took a lot of time when I first built it. It's super valuable though, and it all works flawlessly. Alrighty, well, that's all I got for you. If you want to buy the template, description, the link's in the description, smarthelping.com. Also, it'll be on Eloquence and eFinancial Models. And this is part of the industry-specific financial model template bundle also. Alrighty, and I'll see you guys on the next one.